Hello, everybody. How is everybody doing out there today? I'm just getting my chart or my goodies set up over here on my other screen real quick. And I'm alive and It's all working. We're good. We good. We out here today. Happy Tuesday, everybody. January 27th, 10 o'clock a.m. Central Standard Time, where I am at here in Kansas City. Getting a late start today. Had quite the busy morning. So I had to delay it to this time slot, which I'm kind of actually starting to like, guys. I don't know. You tell me. You tell me if you like this start time. I love doing the 6:30 a.m. to 8 a.m. Central Standard Time slot because it does kind of cover the back end of London, the early part of New York, kind of that overlap. So I like that, but I just want to add in another slot. Okay. Because think about it. I'm starting at 6:30 here. That means California, the whole West Coast, that's all 2 hours behind. So that's 4:30 a.m. their time. And West Coast or the Mountain Standard Time, that's 5:30 a.m. So it's a little early, I think, for a lot of people over there. So I'm thinking about, just adding this in. I don't know. You tell me. You guys tell me. Should I do this twice a day? Should I keep 6:30 to 8 and then add in 10 a.m. to 11 a.m. Central Standard Time? You tell me. This is for you guys. I'm good for whichever. I just want to try to gain some more followers, some more viewership. So that's really my goal with this. So we'll see how it goes. Maybe I'll do this twice a week. Maybe I'll do it 3 times a week, adding in this slot. But I do want to keep some kind of consistency, guys. That's really what it boils down to. Okay, I don't want to lose any viewership because I'm dancing all over the place. So, yeah, like I said, I'll probably just add in this time slot at least twice a week. So on and so forth. So let's see here. Good morning, Thado. Here in SA is 6. Oh, you're in South Africa. Okay, 6 p.m. your time. Okay, so is this a decent time for you, Thado? Let me know. Xander, my boy Xander. Man, things are going all right. I had just full transparency, guys. I did have a couple interviews with a Forex firm, okay, with an FX firm out of London. So hopefully more good news to come on that. That was part of the reason I had to switch times today. And at the end of the day, guys, I'm just trying to replace my income. So trying to replace it, coming from the streaming world as far as with my previous employer, Ola Prime, as most of you guys probably well know. Everything just kind of hit like a ton of bricks. Go from everything's well to, oh shoot, now okay, I don't have funded accounts, so I can't just rely on my trading profits right now. I do have a couple challenge accounts going. I'm trying to pass, but keep in mind, guys, I trade on the daily 4-hour time frame, so I'm lucky to have 1 or 2 good setups a week with how picky I am about these supply and demand zones. So with this firm I am talking with, it sounds like my trading style would really well match what they're doing, as opposed to a lot of these other trading firms I've been, just exhausting search on, digging into trading rules and, all this kind of thing, consistency rules, stuff like that. So anyway, I'll just leave it in God's hands at this point and pray that I get a good, good sign, a good signal from this interview process. So we'll see how it goes. But at the end of the day, my favorite thing to do is to hop on here with you guys because I love teaching. I love sharing strategies. And every time I do it, guys, like I was telling the interviewer today, every time I teach or train somebody, it just reinforces all the rules and all the strategies to myself. So it makes me inevitably become a better trader, right? You guys can keep me accountable. It's my way of hopefully giving a reputation to uphold to everybody out there that watches my streams, watches my shorts, watches my long form videos on Sundays, things of that nature. So it's a lot of fun, guys. I really enjoy this stuff. So anyway, just, keep your fingers crossed. If I could get a, pretty decent, steady, a little more stability on the income side, then that'll just make this even better. So with that, ladies and gents, let's dig into some charts. Let me get my goodies pulled up over here on the left side of the screen. Where are we at? Where are we at? All right, let's share my screen, guys, and see how this works. See how this is working for the day. I got a lot of assets on the top setups, a lot of currency pairs. As far as the top setups goes over here, look at this. We got all kinds of stuff to be looking at. The common theme here is right now, buy the New Zealand dollar. That thing is strong. It's looking really good from a fundamental perspective. We'll look into the individual heat maps here in a second, but yeah, New Zealand dollar is the number one asset. Okay, when we're talking about outperformance, exceeding expectations on, again, those high impact economic calendar events. So New Zealand up there at the top. British pound, believe it or not, is starting to come around. If you guys remember, just as recently as a week and a half ago, I was talking about the British pound being in the cellar with the Swiss franc. Well, it's had quite the turnaround just in a week. It's now up there at the top. Okay, I think it's like number 2 or number 3 as far as currency strength. So we'll look at that heat map in a second as well. The Japanese yen obviously is in quite the flux, as you guys know, with the kind of the rate check that the Bank of Japan kind of did last, several days ago, a few days ago. It's got the Japanese yen just gaining quite a bit of strength. So as a result, let's go get my chart connected over here real quick. Let's look at that real quick. I'm just kind of curious. Yeah, there you go. There's your dollar yen. So that's more attributed to the yen gaining strength, right? Well, we know that because if we go to the JEXI, which is the Japanese index, the currency index, this thing's just starting to fly off the charts to the upside. Okay, that's a 4-hour. Let's go to a daily. Okay, it was in a steady decline, and this is why you even have the word intervention in our daily vocabulary right now, because of how weak this sucker was getting, dropping all the way down to the 60s area. And look what happened. Okay, big giant spike up. Now, not saying that the JEXI is just going to keep going into infinity, but it's no real surprise why we're getting this bounce, because you got, again, rate checks, intervention, worries, thoughts, hopes, however you want to classify that. But that's the reality in the world of Japan land right now. But yeah, we came down here and just took off. Okay, that's 3 solid days of ups, gapping up the last couple days. So JEXI looking pretty strong. As far as overhead resistance, there was a supply zone up here. You guys see I put a daily, which is the yellow rectangle, and then I've got a 4-hour supply zone inside of the daily supply zone. So that would be kind of my first thought of where we could start getting some reaction. So I could see this thing just continuing to go up. And we come in, we'll likely get some type of a bounce to the downside. Okay. The question is it just going to be a retracement or, a little bit of selling of the yen and continue like this? Or are we just going to turn around and come all the way back down? Remember, currencies, assets with big banks and institutions, remember, they just like to ping pong price between higher time frame unfilled order zones or supply zones, demand zones. Okay. So in my opinion, that's your best daily zone right there. And that's your best daily supply up here. Okay? Supply demand. So currently on a wicked move to the upside. What about the Dixie? What about the dollar? It's quite the opposite, ladies and gents. Basically doing the inverse move of itself, just going down like crazy. Now with the Dixie, we are currently in a demand zone. Okay? So as you see over here, we do have a daily demand zone candle here. And what's this big ugly orange candle? Well, that's going to be a much higher time frame demand zone. It's going to be a monthly. So let's click on my monthly chart real quick. Okay. So, and you guys see I've kind of thrown up some pitchforks back in the past. So we are in the middle of that monthly demand zone. There is another zone below it. In fact, there's another monthly demand zone all the way at the origin of the strong move up from 2021, as you can see there. But, does a combination of these demand zones coupled with our pitchforks, does that kind of get us a new bounce upwards? a little bit longer term, something like this, we'll see. Nobody knows. I don't know. Anybody that tells you they know, watch out, because they're probably the same people flashing their houses that they probably rented for videos for their they're probably flashing their Lamborghinis, okay, $50,000 watches, stuff that they borrowed from their rich friends in order to make it appear like they know what the hell they're doing. Guys, I don't have any of that stuff. Okay, I live in a really nice apartment. I'm leasing a car. I don't have all that kind of money. Okay, but what I do have is the 12 years of experience. I don't know if you guys have ever heard of the movie Field of Dreams. Okay, I think it was made in 1989. Stars Kevin Costner. Okay, he builds the baseball field. The ghosts of baseball past come out to play. But he basically heard a voice saying, if you build it, they will come. Okay, so he took that to mean to build the baseball field. And anyway, great movie. If you haven't seen it, you got to go watch it. But that's really where I got a lot of my inspiration with trading, because I know that I don't have all that flashy cash. Okay, I never really came from a rich family. I came from a very modest, to slightly poor family. So I don't have so. But the one thing I do have is the ability to follow my passion, and that's really all if I'm good at anything, it's that. I don't like the status quo. I just don't like being comfortable. Let me tell you, being a trader is uncomfortable as hell. as a lot of you guys probably may well know, right? It's a very uncomfortable living we're trying to make because it's not guaranteed. It's not like a 9 to 5, a 40-hour-a-week paycheck where you're exactly how much money you're going to make every week or every 2 weeks if you're a biweekly earner. Trading's not that. We'll have good weeks, we'll have bad weeks. And when we're in those bad weeks, we just, there's times every single one of us have thought about quitting, right? But, if I'm good at anything, it's just simply sticking to what I put my mindset to, and that's building it. So study the hell out of this stuff, knowing that the right opportunity will come around at some point. And obviously that we get the puzzle pieces put together to start having some consistent profitability. Trading is stressful as fuck sometimes. That's right, Xander. Shit's hard. Okay. But all we can do is just focus on getting 1% better every single day. I read that in a book and it was like beautiful. 1% better. Okay. To eat an elephant, it's one bite at a time. To climb Mount Everest, it's one step at a time. All these silly cliches you guys have heard over and over. But when it comes to trading, it's just simply that. Don't get overwhelmed by it and just focus on one little thing that you can learn today that you did not know yesterday. Okay, 1% better today than we were yesterday. That's really all you got to worry about. It's not an overnight get rich quick scheme like you see all these YouTubers and people on social media, trick everybody into thinking, right? Ponzi schemes and this kind of stuff. No, this shit's hard, man. This shit's hard. So anyway, off my soapbox there, just looking at the Dixie, guys. Again, we're in that monthly demand zone. We are currently in a daily demand zone. So, it wouldn't surprise me to see a bounce upward on this. Now we've chewed through quite a bit of it. So it very well could just chew through the rest of it. But if we chew through if we chew through the rest of this monthly zone, okay, below it, but then ultimately we have one all the way at the origin of the strong move up. I just didn't draw it on yet because I try to not put too many drawings and colors. But even not, as I say that, I do it all the time. But in other words, I'm not worried about that demand zone or that demand zone right now. I'm just looking to see if we're going to chew through this one. So yeah, I would expect to get some type of bounce. We haven't gotten it yet. It's just been kind of parabolic down. Right. So, this will go into, if I'm gonna buy a currency and sell another strong currency, this would make me think twice, just because it is in a heavy, potential bounce area. So anyway, that's your Dixie. What about the VIX? Okay, the VIX got a little hot and heavy over the last week. Okay, it bounced all the way up to the 20s, the low 20s, but as you can see, it's kind of come back down to normal. So that's your volatility index. So yeah, looking pretty decent. I mean, these are pretty low lows, right? Got spiky there for a minute as part of the the Trump tariff threats for the Eurozone, and uh, ultimately he did decide, kind of like the taco trade, right? He decided to kind of step back from it after speaking with NATO's representative Mark, what's his name? I can't remember his name off the top of my head, but anyway, guys, yeah, his words, they carry a lot of weight. So as soon as he did mention that, he also mentioned not attacking Greenland, okay, from a military standpoint, and then that they had come up with some agreement on Greenland. So looks like he got what he wanted out of that. Everything's kind of come back to normal after that, as you can see. The volatility has kind of decreased and came back down. So geopolitics, man, let me tell you, it has its way of moving markets. Okay, you guys know I like following the data, the hard data, but you got to pay attention to geopolitics. You got to pay attention to what Trump says, what Carney says of Canada, right? All these premiers, prime ministers, central bank heads, et cetera, because they have a way of moving the markets. And obviously right now, okay, the U.S. and Canada having another little public skirmish with, potential more tariffs on Canada. But at the end of the day, they'll find a way to get past it. So the market's showing it. Okay, the market's figured this out. They'll see a mean tweet here, or whatever the case is, and it'll kind of come back down and cool down. So anyway, what about the individual currencies, ladies and gents? Let's go look at the economic heat maps. So 63%, so 2/3 of its reports have exceeded expectations as far as your growth numbers, your inflation numbers, your employment numbers, interest, et cetera. So it's doing pretty decent of late. Okay, this thing was in the 30s and the 40s as recently as about a month ago, but the dollar has gained a little bit more strength. Okay, the jobless claims went down. The PCE was really kind of a non-factor. It was a neutral rating. They hit those expectations on the head. The Fed's favorite way of tracking inflation, the personal consumption expenditure. Wonderful GDP number that we had just last week. Okay, up here we did gain 0.1%. So when it comes to the job numbers, that's really the stuff that was kind of bogging down the dollar. But as you can see here, this month we've had at least a few bullish reports come out. So it's really half and half now on the employment numbers. Okay, we're looking good on the wage growth. We're looking good on unemployment rate, and we're looking good at the jobless claims. But you flip over to the JOLTS number, and that's not good at all. The ADP number is not good at all, although it was better than the previous reading. It still missed expectations. And then the non-farm payroll, guys. Okay, we're down to 50K on the most recent number we had on January 9th after having a 64K number previously. So yeah, 50%. It's 50-50 on the employment numbers. But some of these growth numbers, man, okay, growth and inflation numbers. So that's your US dollar. And let's go to the euro. Okay, euro, it's doing all right. It's at 71%. Did of a split week last week on the manufacturing and the services sectors for the purchasing managers indexes. As always, I kind of like to favor the services PMI a little more than manufacturing, because think about it. We're in a digital age these days, right? It's still important. Do not get me wrong. Manufacturing is very important, but it's not as important as it was, especially here in the U.S. I'll speak for the U.S., but it's not as important as it was 100 years ago, 125 years ago, 150 years ago, right? Back in the industrial age when that kind of sprouted up, right? It was huge back then. Railroads, the introduction of steel into building buildings, bridges, roads, all that kind of stuff, right? It was huge back then. Well, all that stuff's built. So now it's all about digital and AI and all this stuff, chips, right? So to me, services is just a little bit more important. Again, that's not to take anything away from the manufacturing, because it is important, because we still have to rebuild stuff rusts, and deteriorates, you got to replace it all. Okay, infrastructure. So anyway, services, the reason I say that is because it is the one that was bearish for the Eurozone. Okay, it was bearish. So a couple bearish ones there. You got 5 bullish reactions or releases. So it's looking pretty decent overall, 71%. What about the okay, it had a pretty decent week last week, got to admit. Because remember, just a week and a half ago, there was only one bullish item on this list. Okay, everything else was bearish or neutral. But just in the last week, the manufacturing and services sector was a bullish reading, a pretty healthy bullish reading as well for the British pound. Look at your services number. Okay, they expected only a 0.3% increase, but they got even more. They got like 2.5%, 53.7, a little more than 2.5% increase. Okay, so that's a pretty strong number. Manufacturing was a point higher as well. The retail sales number, okay, they went from a negative 0.1 to a 0.4. Doesn't sound like a lot, but that's a pretty damn good number when it comes to retail sales. They're running into some trouble on their employment rate. Okay, they expected a little bit of a drop the last reading they had on the 20th, but it was a little higher. Okay, or actually, it remained the same. Never mind. They expected it to go down, but it stayed the same at the 5.1. So, 5%. It's not great. It's not horrible either. Okay, if you want to look at something that's a little worse, Canada's is a little bit worse. Okay, it's up in the 6% range, I do believe. But here in the U.S., it's some like, what is it, 4.3, 4.4? What did I just look at it as? For unemployment rate, yeah, 4.4. Okay, so it's a little better here in the States compared to the Great Britain and the UK area, but it's not like it's horribly terrible. So anyway, yeah, you had a great week though. CPI ran a little hot, which is obviously good for the currency, not so much for the FTSE, okay, the stock market over there, 3.4%. So it did run a little hotter. So yeah, you had 4 bullish reports to only 1 bearish report, and then their GDP number hasn't come out since November 13th. So it's been quite a while for that. So British pound is gaining some strength. It's looking pretty dang good. Flipping over to the yen, which is in the middle of the intervention talk right now, and rate checks and all that kind of thing. They were one for two last week on their high impact events. They did have a pretty good reading on their manufacturing number. It actually increased 1.5 points. So when you're looking at the hard data for the manufacturing sector, guys, it's looking pretty decent over there. Remember, anything 50 or higher is an expansionary number, right? So they're looking pretty good from that perspective. And then the CPI, that was the number that ran cooler, okay? So their inflation went from 2.9 to 2.1. So that's obviously good for the Nikkei. It's obviously good for their pocketbooks when they're buying food, buying groceries, gasoline, all that kind of stuff, okay? 2.9 to 2.1, that's a good number. But again, remember, it works the opposite for the currency. Okay, the banks like higher inflation. I know that sounds weird, but that's just the way it works. It's just the way the economics of it works. So yeah, that was your bearish reading from that week. And then you only have, again, the GDP number that's bearish. But again, they need a new number because the last one that we have is from December 7th. So Japanese yen, pretty okay. Pretty decently strong. Canada dollar. This is what I was talking about with their inflation. Okay, their previous reading on January 9th went from 6.5 to 6.8% unemployment rate. So that's not great. Okay, I don't like that. I don't like that for our loony friends to the north. Okay, I don't like it at all. But that's just the reality of what it is. So, pretty strongly bearish number on their unemployment rate. And again, that's some old data. That's January 9th. So we're just looking for the next reading from them. But as far as the other reports from last week, it was just 2. The producer price index fell off a cliff from 5.9 to 4.9. And then the retail sales number got a little more red, guys. Minus 0.2 was the previous reading, but it dropped even more to minus 0.5. So not a very good number, but they are being buoyed by some of these indexes up here, the growth numbers. Again, the inflation. and they're currently at a 57%. Australia dollar, where are we at for Aussie? Our friends down under. Okay, we had 3 readings last week that were pretty darn good. Again, both sectors of their PMI data came out bullish, and they are in expansionary territory. What I like about this report for the Aussies is their previous reading on the services sector was 51.1, and it jumped. Look at that. It jumped all the way to 56. That's really nice. That's a really great look for the Aussie when we're talking about just, soloing out the PMIs, the purchasing managers indexes, right? Indexes or indices or however you want to say it. But then other than those two, you did have an unemployment rate number that came out quite nicely. Okay, they did go from 4.3. They expected a 0.1% increase, but they actually got the reverse, and they dropped 0.2% to 4.1. So 4.3 to 4.1, pretty nice bullish reaction from that for the Aussies. And their currency impact overall is 71%. Now, remember, if I see a currency that's, and this is just my take, okay, this may be different for other, traders that utilize the Edge Finder. But for me, I just kind of look at the 40 to 60% range as kind of neutral. It's not really strong. It's not really weak. It's just kind of there. It's just kind of neutral. When these numbers start getting over the 60%, 65, especially up to 70 like this, well, that just tells me it's got some pretty decent strength. Hey, I want to go out and buy the dollar, the Aussie dollar, okay, Australian dollar. We start getting under the 40%, down in the 30s, the 20s, that kind of thing. Well, that's pretty weak. So that's where I'd be wanting to go match it up with a strong currency like the Australia dollar and sell that currency and then buy this one, okay, just as an example. So, yeah, Aussie's looking great. Now, remember, this is one of the biggest trading, if not the biggest trading partner with China. So anything China does, if China catches a cold, the Australia dollar can catch a cold along with it. Okay. Think of them as kissing cousins. Okay. A little bit distant, but if one of them gets a cold, the other one does too. So yeah, I like to watch the Chinese yuan for that reason and just, make sure that I'm paying attention to their high impact data over here as well. Let's go to the neighbor. Okay. The Kiwi, which again is the strongest one right now. They've got one bearish item. And that was an old number from the 18th of November, talking about their quarter over quarter producer price index number, where they did drop at that time. Actually, they didn't drop at all. They just remained the same at 0.6, but they expected a slight increase, but they didn't get that. Again, old news. We're looking for a new quarterly number. Okay. We just don't have it yet. So other than that, last week you had a pretty nice reading on their inflation numbers. Okay, they're looking pretty decent there. Obviously, guys, these big banks or these central banks would prefer to have a number around 2%. So it's not there, but it is a 3.1, a 0.1% increase last week from the previous reading. Bullish for the currency, bearish for their stock market. Good. So there's your strongest currency at the moment. It's the Kiwi. Congratulations. And then looking over here at the Swiss franc. This is the one that's still in the cellar. This thing's not looking that great, guys. Look at all the red on there. Not good at all. Last week we had 2 readings. We had the services sector of the PMI come out bearish. Now they are still in expansionary territory on the services sector because, again, they're over 50. But the last week, guys, we went from 52.4 to 51.9. And they expected a 0.6 or 0.2% increase, and they didn't get that. Instead, they went the other way. So not a good reading for the services sector. Manufacturing sector, which we still haven't had any reporting since beginning of January, they are in contractionary territory. Okay? Contractionary territory because they're under 50. January 5th, they went from 49.7 all the way down to 45.8. So not a good look for Switzerland on their manufacturing side. So it shows in the currency. They've had one reading of late where the economists got right, and that was the inflation number. Okay, and that was an increase back then, but it was expected. So it didn't do anything except move it to a neutral spot. So that's the only, I don't even want to call it saving grace, but that's the only one they got right, the economists. Other than that, these other 6 major ones here, guys, they missed. and they missed on the bearish side. So not a good look for the Swissy. Any chance I get to sell the Swiss franc, this is what I want to be pairing with the stronger currencies, which right now pretty much all of them are fairly decently strong. Okay, I want to sell this against the New Zealand dollar and buy the New Zealand dollar as an example, the Aussie dollar. Okay, and then just a final look at the Chinese yuan. The success rate over here on the bullish versus bearish scores. No real data in the last 7 days, but it is right there at a decent score as well. So again, I like to see the yuan, see how it's working to compare it to the Australia dollar and even the New Zealand dollar to a point. Okay, because obviously New Zealand and Australia are major trading partners between themselves, right? They're neighbors. So yeah, anyway, that's that. And then just kind of looking at the overall looks here. Okay, South African Rand sitting there at 50%. Again, we got the Chinese yuan at 67. But if we look at the left, okay, again, just to recap this, the strongest currency is New Zealand. The Kiwi, okay, New Zealand dollar, 83%. So any chance we get to buy the New Zealand dollar, man, let's jump on it. Same thing with Aussie dollar and euros. Okay, they're tied for second at 71%. So a simple trade plan all on its own, if you're just isolating fundamental analysis, is to match up pretty much any of these currencies with the Swiss franc. So sell the franc, buy about anything else up here you see. That's what I'll be looking at as far as looking for demand zones. Okay. Now, Swiss yen would obviously I'd be looking for a short, right? Because the Swiss is the base currency. So Swiss yen, I'm shorting. Odd Swiss buy, Euro Swiss buy. Yeah, just match it up. So it's no surprise that Swiss franc's on here quite a bit to sell. Okay, there you go, the very top. New Zealand Swiss. Very strong, very bullish score of 14. A lot of blue readings on there. You got a lot of neutral readings on there as well as far as the fundamental comparisons between the Kiwi and the franc. Okay. But as far as the economic growth, consumer strength numbers, those are getting some really nice readings, talking about the GDP, the PMI data, the retail sales, okay, and the inflation numbers. So New Zealand Swiss at the very top of the list. In fact, all the New Zealand pairs are on there. New Zealand yen, New Zealand CAD, New Zealand dollar. Pound New Zealand is short. Euro New Zealand is short. Aussie New Zealand is short. Every single one of them. Okay. So New Zealand, everyone are on there. Swiss franc's on there quite a bit as well. Aussie, pretty good strength there. So let's go take a look at some of these. And I am actually currently watching, let me see here, New Zealand Swiss. I want to get the Aussie Swiss. Yeah, that's the one I'm watching. So let's go take a look at the charts. Aussie Swiss, Aussie Swiss. Okay. Aussie Swiss. Just making sure my stream is still working all right. Where are you at, Aussie Swiss? Where are you at? You hiding from me? Oh, I found you. I found you. Okay, here's our daily chart of Aussie Swiss. Again, I'm looking for daily 4-hour demand zones. Okay, that's always goal number one. Always goal number one. In this case, I don't have a daily demand zone up here where I'm looking. Okay, so let me turn my drawings off for just a second. Here's the thing. Yes, this is by definition a daily demand zone. It just didn't really push that far. Okay, it only went 1 unit of range. So in other words, if the range of the daily is from this top here to this bottom, I prefer to see that unit times 3 above the proximal line of the zone itself. In other words, the consolidation. I'm not getting that, but what I am getting is a very strong fundamental and sentiment score. So I think I'm okay with just ignoring the fact, again, by definition, that is a zone, but it's not really a zone because it didn't move 3 units away. So I'm really just going to base this off a 4-hour time frame. Okay, if I go to the 4-hour, turn on my drawings again, you'll see we got a couple opportunities, 4-hour demand zones. Now, again, both of these zones are within that daily zone, even though, again, it didn't go that far. So I'm looking at this candle here because I have a gap. I'm looking at this candle down here, which is the origin of the overall strong move up with a gap as well. Now, ordinarily, I would want to go for the one that's closest to the origin of the overall strong move up, ordinarily. But in this case, I'm not really getting the greatest participation as far as the VSA, the volume spread analysis. Okay, I'm not really getting the greatest. So, and also there's just an extra candle there that I wished wasn't there. I only like to see zones with 1, 2, 3 candles max. In this case, I got 1, 2, 3, 4 basic candles. Okay, that's just a little bit too much for me, because that would tell me that the big banks, the financial institutions, had quite a bit of time to potentially get a lot of, if not most of, or all of their order in. So that's really why I'm liking this demand zone here. It's only a 1 4-hour candle block. Now, currently, we've bounced into the demand zone, and you do see I've got VWAP. I just threw up a couple VWAP lines over here. Okay, I threw one under this little swing low. I threw another one under this major swing low, and that's dynamic support in this case, potential dynamic support. The banks like to do this. They like to see where VWAP is in relation to price, and wherever they want to get in or out of an order, get into long-term orders. So currently, that top line is going through the demand zone. And I kind of split hairs when I put this zone on. Now let's go to a 1 hour. Now, it's kind of subjective. Okay. Again, this is the zone. This is the VWAP that's going through the demand zone. A lot of people probably look at this as, oh, that's not really a major swing low. That's not enough to worry about. And they may be right. Clearly, this one down here is a good one because it's at a major turning point, a major pivot point. This is kind of a minor pivot point. So, in other words, how much credence do I want to put into the fact that it may very well be a, pretty decent indicator for going long here? I don't know. I just threw it on there to see what it looked like, and that's what I came up with. So, but anyway, 4-hour demand zone. And then inside of this 4-hour demand zone, do I have a hourly demand zone? Okay, let's go to a 1-hour chart. You see I got a white dashed line in the center of it. That's because I do have a 1-hour demand zone. So anytime you guys see me putting white dashed lines, that's usually me putting that line to the start of in other words, the proximal line or the beginning line of that zone, whether it's a supply or demand, doesn't matter. So I basically put that line to the top of this green candle here. Okay, because I had a nice gap out, and price just kept going. So I think that that's a pretty decent hourly demand zone. When price left the zone, okay, we had some pretty decent volume spread analysis activity. I just got to be honest, I wished it would have continued quicker to break this swing high up here where this liquidity's at. If you're looking at it on a 1-hour time frame, we did have quite a few green candles in a row. They just weren't, expanded range candles. They weren't big, giant inefficiencies. I had the inefficiency because I had the gaps on these time frames, 4-hour, 1 hour. So it's just one thing for me to be cautious about. That's why I haven't entered the trade yet. I just want to see if the institutional activity is going to kind of jump in. Now, look at this. Now, when we bounced into the zone, number one, we hit both VWAPs. And as you see the VSA activity picking up, that's a good sign. I'm also getting some strong rejection signals because there's got a big wick here. You got a big wick here. But just in looking at where the candle bodies are closing, they're still producing lower lows and lower highs. Just isolating the bodies, the real bodies, right? So that's part of the reason I haven't jumped into this trade yet. What I would like to see is a break of structure to the upside and then a return. Okay, I kind of drew it up. There's a couple of different time frames we could look at it on. If I go back to a 4-hour, okay, if I want to look for a break of structure on a 4-hour time frame, which makes sense because this is a 4-hour demand zone, then I really need to see this kind of some price action like this right here. Okay. Come up, break these tops, all this liquidity that's just chilling in this area from these sellers. You see those wicks on the top side. There's a lot of seller activity there. So where's their stop losses? Okay. They got their stop losses in there. What are stop losses on a sell order? So there's going to be some stop losses up here. There's going to be some buy orders up there. What do big banks and institutions need to fuel their sell orders? They need buy orders. So the way I'm kind of hopefully playing this is we get a push up, we break the structures, we tap into this liquidity pocket, and the big banks can use these buy orders as sell orders to push price back down to where we hopefully have a new demand zone created, and then we take off to the north. Okay. So that's why I drew up this projection tool like this. I would like to see now I could, because I just don't want to buy here when the bodies themselves are still closing downwards. Really don't. This would be a limit order in some circumstances, but I just, it's not the origin, guys. Again, this is out in the middle. Now it's still in the bottom third of the curve analysis, so I like that. But with having all this here, it just makes me a little skittish because it very easily could bounce into this consolidation zone and go back the other way. In fact, I think if I turn on my not that one. Actually, yeah, let's take a look at volume profile real quick. Okay, so volume profile looking good. Okay, we've hit that. I'm looking for my consolidation. So this is the master pattern, guys. This is where I can find easy consolidation boxes if I turn everything off. This is another reason right here. Okay, this is where traders get chopped to bits, chopped to pieces. At this point, we have broken the low of it, obviously. So let's see. I want to look at one other thing. Okay, daily master pattern consolidation. That's way below. So obviously, if I'm looking to buy this market, I like to be on the top side of major consolidation zones. So this is a good sign. Okay, looking at the master pattern. The master pattern is just a tradable way to look at Wyckoff theory, accumulation, distribution, trend. Right. So I like to see it on the top sides of these boxes. That's the master pattern indicator. Let me turn that back on for a second. Going back down, smaller time frames. Okay, if I'm looking at a 30-minute, I like to see that I'm below those consolidation points. So everything's working out pretty well. I just don't know what's going to happen when we bounce up and bounce into these zones. Let me turn my master pattern off now. Do I have any major supply zones here to look out for? Yes, potentially. Right here. This is a potential spot where price could bounce price back to the downside. Now, am I ultimately that super worried about it? Probably not, because again, I like to see zones that have 3 candles or less. But in this case, we got all this. That's a bunch of candles. It's a bunch of chop. So I don't think I should really be that worried about it in the grand scheme of things. But nevertheless, job number one that we have in the markets is capital conservation. So it's just got to prove itself that it's actually going to bounce. So this is really what I'm looking at. I'm literally halfway to wanting to just go ahead and buy this market now. But if I'm following my rules strictly, I need to wait for a break of structure and return to a new zone, right? I don't really want to be doing that on these smaller time frames because I'm looking at a 4-hour time frame for my entry, okay, for the main demand zone itself. So that's the major one. But if I'll go down to the smaller time frames, okay, remember we had a 1-hour demand zone. So at that point, perhaps I can go down to a 15-minute and look for a break of structure here, which for me, it would be here. That's where I've got an alert set. You guys see I have an alert set at the top of these wicks. So what I could potentially do here is just wait for a break of structure and then a return to a demand zone to buy. So it just all boils down to, risk tolerance. Do I want to gamble a little bit on the smaller time frame, or do I want to wait for the higher probability setup that says, let's break the much bigger structure up here before I return to price? So there's really two different ways of playing it. I'm weighing both possibilities in my head as we speak. But I have to find some type of demand zone form down here. That's my personal goal. So that's a 15-minute. Let's look at a 10-minute and then a 5-minute. Okay, I can't use this 10-minute candle because that candle has been touched by that candle wick. So it's mitigated. Okay, so I can't use that as a 10-minute demand zone. Again, anytime a wick mitigates the zone or a candle body, doesn't matter, then it's a one-time use only. Okay, for use one time only. So I'm not getting the picture on the 10. Last resort, let's try the 5-minute. And right here, as you can see, getting a 5-minute candle. So there is a 5-minute demand zone with a gap, which I may very well use. But what I will not do is put a full position on this, because on this 5-minute demand zone, did it create itself? Did that demand zone create itself? In other words, is that a starting point for institutional activity? Well, in two ways, I want to say no. And the reason I say that is because no, left the zone, we had the gap, but did we have a lot of trading activity on the VSA candle, the volume spread analysis candles? No. So that's number one. Is it's probably more retail trader created. Because if this zone were created by an institution, we'd be having much bigger candles, yellow candles, red candles. But we don't. And not only that, this zone was created after price dropped into this previous demand zone, right? So this demand zone pretty much had a say in creating this demand zone here. So that's just why I'm a little leery about it. But again, not enough to not trade it, just enough to decrease my risk. Okay, so that's what I'm looking at. I've got to see this break structure first. Again, breaking this zone. I kind of drew this zone on a, what was it, 30-minute, I think. Okay, so 30-minute, I believe it is. Let me go zoom in. Yeah, this zone right here. I think it looks better on a 15. Or was it 1 hour? Hell, no, it was a 30-minute. Yeah, 30 minutes. Okay. I don't think I'll be. And again, I'm not too worried about it because on a 30-minute time frame, when this zone was created, we didn't even close at the bottom. So again, this is a very bullish reaction. So I like it. I like the wicks. I like the wicks for my potential long position on this thing. But I just feel like I need one more piece of proof to show that we can at least break this structure right here. That 5-minute demand zone that we just looked up, right? So that's what I'm looking at. I think that would make me feel a heck of a lot more comfortable in entering the position. My old self would have just bought this zone at the touch of it. Okay. But I've just learned over the years to figure out how to filter out potentially bad ones or that zones that don't work. So anyway, alert set. So there's really nothing I can do on that for now. Just going to let it do its thing. Let's go look at our other top setups. And first off, guys, just stepping back for a second, as you see, we do not have any gold. We don't have any silver. We don't have any Bitcoin. We don't have any indices on here. Okay, none of that. None of that. Pretty rough. So, again, this is all currencies right now. Pretty risk off in some aspects. So they're all neutral. They're just not getting a good, strong case either way to buy or sell. Talking about those assets I listed. If I go to neutral, focus only on the neutral scores over here just for a second, S&P 500 is a +3, so that's neutral. Because remember, neutral is +5 down to -5. If the assets float within that range, it's just not a strong enough reason to go buy or sell. So anyway, S&P is a 3. You got oil at 2, silver is a 1, NASDAQ is 1, gold is a straight up 0. Okay, straight up 0. Bitcoin -1, and then you got the Dow here, if anything, on the bearish side, but it's still 2 points away from that. So yeah, all those assets are just off my list right now, and I'm just focusing on the top ones, which just so happens to be nothing but currencies. Okay, they did add the U.S. dollar, by the way. Trader Nick did into the Edge Finder to the top setup. So now we get that. So this is basically saying, hey, the move to make is selling the U.S. dollar, which means putting it with a stronger currency and buying that other currency. So it is kind of cool that he did get that added in recently. So I like that a lot. Anyway, yeah. So New Zealand, Swiss, New Zealand. Let's go look at a couple more of these guys. It's already gotten to the 1 hour mark, almost. So I'll probably just hang on here for another 10 minutes or so. But let me know if you guys have anything else you'd like me to check out. My favorites are gone, Xander. What do you mean by that? I'm just curious. So yeah, let's go look at. I'm going to pull this over here just so I can see it easier. Oh, I need to refresh that screen actually, because I know New Zealand yen is number 2. Come on. Okay, so New Zealand yen. Let's go take a look at that. New Zealand yen. Go to my 4 hour time frame. So guys, I really do kind of like New Zealand yen. We got a daily 4 hour demand zone confluence just below it with a VWAP. Okay, with a VWAP line going through the bottom of it. Got a VWAP line over here. Okay, so as price continues to move, then this red line, this VWAP line, should get a little deeper into this demand zone. And you see a white dashed line, so that's a 1 hour demand zone confluence. So I've got a daily, a 4 hour, and a 1 hour demand zone confluence right here in this area. The only thing lacking is the fact that I wished it would have had some more institutional proof that they created this zone. But not only that, this is the zone. If you guys remember me complaining last Monday, this was the demand zone that just missed my 4 hour confluence. That was 2 pips. So, but nevertheless, it hit the 1 hour. I mean, the daily demand zone. So potentially I might not even like it as well for that reason, because did it form itself? No, it technically bounced off the daily and kind of formed from there. So it's no wonder I'm not seeing a lot of institutional activity taking place. Metals scoring. Yeah. Xander, do you have the Edge Finder? Xander? Yeah, can't remember my friend. No, let's see. Yeah, because you were with us at Ola Prime, right? I do believe so. Metals scoring a 0. Yeah. Yeah. Metals are scoring a 0. I mean, if you're looking at these things from a technical aspect, let's take a look at it real quick. It's just sky high. It's just parabolic again. I mean, there's your gold. And you guys see clearly, I've got demand zones, but they have to drop quite a bit for my taste, all the way at least down to this daily demand, 4,500, 4,600 area. Just so happens to also coincide with a former resistance line over here before that big ugly drop we had at the end of the year. Okay, the profit taking and all that, end of the year blues. So I like that. And there is a 4 hour in here too, I think. It's kind of hiding. Oh, maybe not. Yeah, well, there is a 4 hour. Yeah. 4 hour. Yeah. So basically the same candle. There is one more 4 hour candle right after, before that gap up we had on the 18th. But again, is this a gigantic consolidation zone if we look to the left? Yeah. So I don't know that I like that so much. But closer to price, guys, as you see, I've got another alert set. This was a pretty good consolidation and then, strong push out that broke a structure on a nice yellow volume spread analysis bar. So I do like this. I just have to go down to the 4 hour time frame, because on a daily, Yeah, I mean, you could call that a daily demand zone. It's just a little higher on the curve. So this is basically one. If we're just looking at the technicals, because it's not given a fundamental sentiment reason at the moment, then 4 hour we have the demand. If we go to 1 hour to find my confluence, then that same spot's got a 1 hour confluence. It's just a little higher up. Okay, so this is our 4 hour demand zone. That wick right there would, by definition, be the one I would have to follow if I'm looking at this on a 1 hour time frame. In other words, my white dashed line, right? Like that. So it's out of the 4 hour zone, though. That's the challenge. So I'm going to go down to a 30-minute. See if we can find one on a 30-minute. This might produce a better picture, possibly. Okay. I can't use this. I can't use this either because of that wick right there, right? So that wick mitigated this one-time 30-minute candle, this 30-minute demand zone candle. Might be hard to see. So yeah. So you guys see that wick right there, right? That's touching that candle. So I can't look at that on a 30-minute time frame. The lowest I'm interested in going on this time frame is 15 minutes. So we're now here on the 15-minute time frame. And on a 15-minute time frame, guys, I don't think we're getting anything, actually. Let's see here. What am I doing here? Okay. So there would be your there would be your 15-minute candle, but it's touching there. It's mitigating it. So I can't use that as a 15-minute. If I go that next candle up, yes, I had a gap, but it touched that wick. So I can't even use that. Oh, Fed minutes. Okay. Yeah. Hey, I'll be on Trader Nick's stream tomorrow, by the way, guys, at Trader Nick. And I'll be on like right before the Fed minutes come out. So if you guys want to hop over there, say hi, then you'll find it here. And they actually will have the speech going and everything. Okay. And then they'll add their commentary after. But over here, if you go to Trader Nick, okay, click on his live stream. He's got quite a few followers, guys. He's got 523,000 subscribers. So this guy knows what he's doing. This is one of my guys I've been following for a while. And now I get the blessing of, appearing on his streams now and then. So it's pretty fun. But yeah, tomorrow, okay, January 28th, FOMC right there. So come check it out. Again, it's at Trader Nick on YouTube. And yeah, check us out there. Check out the commentary. They like to break down everything live. Okay, so they'll let the speech go, and then they'll kind of follow it up with their reaction. So it's pretty cool to watch. So yeah, definitely come and check that out. But anyway, just to finish up on gold, I'm just not getting anything right now. Yeah, I'm getting a nice looking 4 hour demand zone, but that's about it. I'm not really getting any confluence here. Really not. So give me a big discount. Give me some fundamental strength on gold, which unfortunately means dollar weakness, right? And then we'll talk. But with the dollar being so strong, it's not a, it's not a surprise that I'm not getting any metals bullish signals. Okay. Same thing for silver. Pretty nice and parabolic. Yeah, you got some demand zones, but they're just much deeper. So yeah, metals are completely off my list right now. Just to finish up here, let's see. Let's take a look at a couple. Let's just look at the rest of these very bullish scores, and then I'll take a look at a couple of these bearish items, and then we'll call it a day. Okay. So New Zealand Swiss done, New Zealand Yen done, New Zealand CAD plus 11. Take a look at this. See what we got over here on New Zealand CAD. Kiwi Looney. All right, bounced into a higher time frame daily demand zone, supply zone rather, sorry. So I want to be careful about buying, knowing that we've hit this higher time frame resistance. So a decline down to this demand zone area is a potential. This daily demand zone also has a 4 hour demand zone inside of it. So I like the confluence. I did also put a VWAP line from this swing low on a lower time frame. And as you can see, it's in there as we speak. But by the time price comes down, it's probably going to chew through it. So what about this one down here, guys? Let's look at VWAP. Let's throw an anchored VWAP line right there. Okay, so yeah, even that's going to be too high for this demand zone. So we may not get away with using VWAP as a confirmation over here. Well, yeah, I guess we could. So if we go to this major swing low down here and this daily time frame, so that's as major as it gets, guys. Big decline and then the start of a new uptrend. So that's a pretty legit spot to be putting an anchored VWAP line to. The bottom, the lowest point, whatever that candle is, you mark it. Okay, goes right through, price dances around it for several weeks, and then now it's settled inside of that demand zone, that daily demand zone down here. Okay, so potentially in the future, price from this higher time frame supply zone could potentially go and seek out that demand zone. Because remember, these higher time frame zones are unfilled orders, and they are showing strength away from the moves. The banks like to tackle those higher time frame liquidity pockets, the supply zones. So I very easily could see price dropping all the way down here. But with such a strong reading, I ain't going to hold my breath. And that's why I'm okay looking at this demand zone out here in the middle. It's also got a blue dash line going through it, which means form of resistance if I look all the way to the right, or to the left rather. So I like it. Let's go down to 4 hour. Okay. What's 4 hour giving me? Okay, here's my 4 hour demand zone here. Got a nice push away, got a gap. Okay, that little push away, that little runaway gap. It did retrace a little bit. Not too big of a fan of that, but it still did not touch it. And I could also look at this as a demand zone, a 4 hour demand zone. I think. Yeah. Okay. That's also a 4 hour demand zone with a gap above it. Now the gap ain't as strong, but that is a gap nevertheless. So let's look at this. Okay, so our fair value gaps, our runaway gaps, this is the one on the bottom. And then this is the one for the top. Now the one on the top, as you can see, is extremely tiny. That's very tiny, is it not? So do I really want to put all my eggs in the basket of that? Well, I would say possibly, and here's why. Because this is what's called a zone on top of a zone. When you get a zone on top of a zone like this, that's a pretty good confluence in itself. Oh, by the way, it's inside of the daily zone, the daily demand zone. So I like that from that aspect. Forget the gap for a second. I've got two demand zones inside of one bigger one. The way I would probably look at placing this trade is, number one, if I got into this trade, I personally would just prefer to wait for well, actually, let's take a look at the 1 hour first. What's the 1 hour giving me? Gaps. Do I have any gaps here? Let's look. Yeah, see, I'm not really getting the gap now on the bottom zone. And the bottom zone didn't even give me a lot of VSA strength, a lot of volume spread analysis activity. Okay. But this one over here, this is where kind of this big chunk of volume started to create this demand zone up here. So I do like that from that aspect. But as far as 1 hour confluences, I don't think I have any, do I? I don't really see any gaps. So I may just have to, just stick with the fact that we got a daily and a 4 hour and just call it a day. But I'm not, because I don't have the gaps on the lower time frame, the 1 hour, that's just yet another reason why I would not want to put a full risk on. So for me, a full risk is 0.5%, 0.5%, guys. I'm in this game for the long haul. I'm not in it to make $1 million overnight. I want to be around 10 years from now, 20 years from now. So with where I'm at, I prefer that a full position is 0.5%. But in this instance, rather than a 0.5%, I'll probably just go down to a 0.2% or 0.25%. Okay. So in other words, cut my risk in half because I'm not seeing the lower time frame gaps, acceleration gaps. but I do have it on the daily. I do have it on the 4 hour. So I'm gonna dip my toes in the water and use the whole thing. So I'll buy from the top 4 hour demand zone, but I will incorporate the daily as my stop loss. So in other words, stop loss goes below the daily demand zone like that. Like that, rather. Okay. Stop loss is going to be down here. But I will buy after it bounces into the first 4 hour demand zone, which is right here, for a potential to retrace back to, this high point right here. So that is a trade opportunity. And as you can see, we do have one of these VWAP lines kind of snaking its way up through there. So as price comes down, the VWAP should continue to level out somewhere in that area, right? And that would give me a bounce off VWAP as well for just an additional odds enhancer. It's not a reason to buy this asset. It's just nothing more than an odds enhancer. Okay. Putting as many positive things, bullish things in my basket as possible when I go to place this order. And then smaller time frame as price makes this bounce. 5 minutes, 10-minute time frame. That's where I want to start seeing the break of structure to the upside with a small retracement. So it's just a lot of steps to ensure that it's proven that it wants to continue to rise after it collects these unfilled orders from, collect these unfilled orders from the demand zones themselves. So that's going to be New Zealand CAD. In fact, you notice I need to move my alert up to this top. I had it onto the bottom one. What the hell was I thinking, Tiger? What was I thinking? I'm going to put it on the daily zone itself, the proximal line. That way, when price drops down, it starts screaming at me and tells me that I got about 10 pips before it hits the 4 hour demand zone itself. So that is that. New Zealand CAD, Aussie Swiss, New Zealand dollar. And this will round out the bullish ones, the very bullish ones. Okay. I like this. Similar situation to New Zealand Swiss. 4 hour demand zone here, 4 hour demand zone down here. Obviously, you guys know I prefer the one closest to the origin of the strong move up or down if it's supply. But again, we had 4 candles there. It's 1 candle more than what I like. It's basically a carbon copy of New Zealand yen. The only difference with this, let me see here. Let's go down to a 4 hour just for a second. Give me 1 second here. Yeah, it's same thing like we spoke of earlier. It's just kind of still giving me the real body closes, lower lows and lower highs. Let's go to a 15 for a second. So on this one, yeah, this is what I drew up earlier, guys. Again, I just need to break this structure and then retrace to 5 minute demand zone. So let's skip that. We'll finish with the New Zealand dollar. Okay, the one US dollar based pair as far as the strong ones. Now we do have euro dollar longs as well and Aussie dollar. But as far as the strongest dollar based pair, it is the the New Zealand dollar long. So common theme again, selling the dollar, guys. You see how bad the US dollar has been dropping, right? So let's go take a look at these majors. New Zealand dollar. Okay. We have successfully, I do believe, chewed through this daily supply zone. And I don't know why I had it colored red. It should have been yellow. Okay. So we have chewed through the daily, have we not? So that's a very strong signal. If we have the strength to chew through a daily supply zone, then there's clearly some strength down here in a form of a demand zone. So as far as your daily demands, I've got one here, got one down here. Remember, it's a strong score, a very strong. So there's your daily 4 hour confluence hanging out in the middle. That's going to be about your 50% fib retracement area. Okay. But this looks to me like a 38.2 retracement area right here. I'm just speculating. I don't know. Let's go measure it. Look at that. 38.2. 38.2 retracement. Okay. There's a 4 hour demand zone. Now remember, I don't have a daily confluence. but with a very strong score like it's got, again, a +10, a very bullish +10 score, I'd be interested in this 38.2 level. So there's your 4-hour zone. What does it give me on the 1 hour? Do I get a confluence? Do I get a candle here? Do I have a gap? I do. Look at that. See that candle right there? That's my 1 hour candle with a gap just just above it. Now, the price tried to come back and close the gap and collect the unfilled orders from the 1 hour demand zone, but it didn't do it. It didn't make it that far. So it still leaves those unfilled orders. And as you can see, I got my white dashed line. I drew up my gap in that little white box, right square in the middle of that 38.2 retracement, ladies and gents. The reason I'm excited about buying something this high on the curve is because it had the strength to break through a daily supply zone and close on a 1 hour time frame. Look at that. So at this point, I just need a retracement. Just give me a simple retracement to this area. And I'm not, and that'll make it to where I'm not worried about the fact I don't have a daily confluence on it. Okay. Yes, it is a little high on the curve. Okay. The Hungarian flag, you guys like seeing me draw from swing low to swing high to map out my 3 quadrants, my 3 equal quadrants of 33% each. We are high on the curve, but we also are high on the curve with the fact that there was a 4 hour demand zone that created itself, because it's not being created off of hitting a zone over here. This thing created itself. Institutional volume looks like it picked up because that leg out candle had a yellow candle. Okay. Remember, anytime you see yellow and red VSA candles, that's typically institutional activity. You and me, we don't have the power to move the markets like that. We're not trading $1 million, positions. We've got the small peanuts compared to the banks and institutions and hedge funds, right? So this, in my opinion, this 4 hour demand zone to bust through this overhead supply, I got to pay attention to it if and when price returns. But as you see, got some more. Got some more. What about a VWAP? Do I have a VWAP help? Well, that's the lowest point in this immediate area. And as you can see, it's going through this bottom demand zone at the moment, or the middle one, I should say. By the time price rolls around and comes back down, perhaps we get a VWAP. Oops, I do that every time. Perhaps we get a VWAP line up in the demand zone at some point, which would obviously be a nice dynamic support to bounce. That would be beautiful, guys. If we get VWAP in there like that, so you got VWAP, you got demand zone, you got demand zone confluence because it's 4 hour and 1 hour. You got the 38.2 Fibber. And obviously you got a very strong bullish score on the edge finder. Okay, +10. So that's an excellent reason to potentially look to place a buy in this order or in this area, right? That would be a nice trigger there. And again, as always, for me personally, I just like to go down to a 5-minute, 15-minute time frame just to see on the smaller time frame, am I starting to curl around and break structure to the upside? Beautiful, because I don't have to worry about this supply zone anymore. Okay, those unfilled orders have been taken, so it's basically cleared a path for us. It's cleared a path. So I'm just going to move that zone over here out of the way just so I know it's already been mitigated. I'm going to do it light yellow. It's just telling me it's dead. Okay, it's dead to me. You're so dead to me. And then we'll let it go. So that's it on New Zealand dollar. Pound dollar is going to have a similar story. Okay, it broke through a supply zone as well. The same daily supply zone we had on the Kiwi dollar has broken on the sterling dollar. So got some zones down here we'll watch out for. Aussie dollar was on my bullish list. Got a zone down here. Same thing, guys. We broke through a daily supply zone. So I have to keep an eye on this area. I've got an alert set. Dollar yen going down is on the list still, I do believe. It is. Dollar yen. Come on. Why is it not scrolling? Why is it not scrolling? Oh my gosh. I don't know why. Sometimes that just gets to a point where it kind of freezes up. So let me just refresh it over. Okay. So yeah, dollar Swiss, -6, guys. So, at this point, it's just dropped down to a deep discount. So if I'm trying to sell in premium, if I sell anywhere down here, it's by definition low on the curve. So ultimately, the retracement clear up to the top from where we started out the day Friday would obviously be the best premium to be shorting this. But with a strong score, it may not make it back. It may keep going, especially with intervention, guys. The Bank of Japan could pull the plug on this thing any second now. Okay, they could place a massive order to buy yen, and this thing just dropped like a rock, 1,000 pips, 2,000 pips. As it stands, it's already dropped. How many pips is this? 600 and over 600 pips, guys, since Thursday. Okay, a 600 pip drop. That's massive. We could possibly already be seeing intervention taking place. I know they talked about rate checks and all that. They could be secretly just accumulating a big, massive short on the dollar yen or I should say, massive buy on yen as we speak. So how do we play this? Well, the only thing I've really drawn up, again, this is low on the curve, so it's not a premium price. But I did draw up I believe a 30-minute. Let's take a look. Yeah, 30-minute. So yes, it did by definition create a 30-minute supply zone over here. Not a very good gap at all, but the point is we had some pretty good volume coming out of that. In other words, VSA. You do have the beginning of this gap, the Sunday gap we had. Sunday here in the States, Monday over in Europe and all that, right? But that gap had zero volume. No, zero VSA, this big, lovely drop, right? So do I really want to put all my eggs in a basket of close in this gap and then shorting? I don't know, probably not. So I would just say what I've kind of been echoing on most of these, instruments that have been looking to buy or sell. Yes, I'll look at this area as a potential short, but only put on some peanuts for risk. Not going to be putting on any 0.5 or higher percent risks. Maybe a 0.2, hell, maybe even a 0.1%. Which may not sound like a lot, guys, but with my two challenge accounts, it's $350,000 in trading accounts and challenge accounts. I got one that's a 250K account, and I've got one that's a 100K account. So, that's a pretty decent number, especially if I catch a runner to the downside. But I don't know that I'm really expecting a big one, but I may still put a position. As you guys see, I do have an alert set. So that's your dollar yen. And I do believe that's about all I have for you guys. I don't think I really have anything else. There's your Bitcoin. We do have a 4-hour demand zone it's getting ready to bounce into, but again, it's neutral. And plus, I think the better demand zone area would be somewhere down here, 76,000, 77,000. But again, I don't have a reason to buy it. I just don't. It's neutral. It's too neutral for me. Keep in mind, as I close, guys, keep in mind tonight, 6:30 p.m. Central Standard Time, we do have Australia's inflation numbers coming out. Again, they are expecting a 0.7% increase. So if that comes out like that, they could potentially see a nice little bit of a spike. Just depends on how priced in it may or may not be. That's for the month-over-month number. The year-over-year number is projected to only increase by 0.1%. Let's take one last look at the Aussie index just to see if it's been on a trajectory upwards. And as you can see, it has been on an upwards trajectory. So even with a potentially hot reading on this report, okay, 0 to 0.7, that would obviously be good for the currency. But look how much the Aussie dollar index has already moved. So if it's been exploding upwards with all this other geopolitical drama, do you really expect it to just continue spiking that hard? Who knows? But I would venture to say I'd be very careful about just automatically buying Aussie-based pairs because it's already made a massive run up, right? It's already made a 4.5% run up in the last week and a half. So just be careful on that. But naturally, if you get a drop, if you get a big decline down to one of these demand zones, okay, there's one there, there's one there. If you get a decline to that on a positive inflation number, well, that might be a potential place to be buying some Aussie-based pairs. But just wait for those supply and demand zones to form, showing strength, showing gaps out. Okay. Volume spread analysis picking up, showing institutional volume. And follow the banks, man. The big banks, they leave all these clues all over the charts. Okay? They leave their footprints. So all we need to do is just figure out how they trade and just latch on and ride their coattails. So that's all I got for you guys for today. I'm going to hop up out of here, and I'll be back on in the morning, 6:30 a.m. Central Standard Time. I will get the new link created here shortly. So as always, please like, share, subscribe. I am on all the socials as well. Okay. Facebook, X, Instagram, Reddit, and TikTok, although TikTok's been a little bit of a mule lately. I don't know what's going on with it. It has not worked lately. Since the US bought it, there's been some fishiness around it, but I'm going to see if I can find, yeah. If you guys go right here to my about section, you'll see my link tree right here. If you just click that, if you guys, have a favorite social media site that you like, go over here and follow me on all these other ones. Okay. Whether it's Facebook or X or whatever the case is. Because every single day I do make a shorts video and I post it on all those channels. Okay. Here's some of my recent ones, just as an example. And I'm getting quite a few views on the shorts, so I'm pretty proud of them. But my thing is, like I said at the outset of the show, I got to start growing these numbers, guys, on my live streams. I appreciate each and every one of you that are on. But, man, I need to grow this thing. I really do. So whatever you guys can do to help me out, again, like, share, subscribe. Tell your dog, tell your neighbor's cat. Okay, if you have a horse, tell the horse. Whoever. Anybody with a pulse, I'm game with. Okay, I'm just here to have fun, provide the tradertainment, have some fun, throw some jokes, give you guys, more importantly, the important info, the topics du jour on assets that we could be buying or selling. So with that, have a wonderful day. Tiger out.